Hi, Warriors. Good turnaround Tuesday to everybody. Richard, DJ, Scott, how are you, buddy? Sinatra, Ann, Bivana, David Fox, welcome to F.A.C.E. Michael Bergman, how are you? Hugo, Thomas. Okay, let's look at some charts.
Good early morning, Dale.
Hey, how are you? Okay, man, good to have you back.
Good. Yeah, just one day.
Okay, I know. We all need a day to every once in a while.
Morning, Dale.
Hey, I'm having a little trouble here. Okay, there. It's a YouTube deal. Okay, Ryan, how are you?
All good, mate. You?
All right. So, God, what a monster Euro pound it's been, huh? And I don't know. I don't think anyone that's been in F.A.C.E. is short this pair. So we've been talking about this for a while. This 86 level is big because, you know, you look a little longer term. I have this horizontal resistance here. Yeah. What do you think, guys?
It's also the 38.2 fib of the move from 92.
Okay. So that's why it was rejected and not much and threatening knocking on the door again. Then 87, I think it's all clear to Stel's target, 90. Any comments on what got the cable today, guys?
PMI.
Weak PMIs, quite weak actually. Good morning.
The services.
Good morning, Stel.
Morning, Stel.
Okay. Yeah.
Services dropped by over 7 points.
Yeah.
Okay. All right. And yesterday's, Friday's reversal in S&Ps and yesterday's follow through being threatened. I look at it and kind of see two drives here. You know, that either we're going to try and hold here or there's a new low coming. I know even the bears are looking for a rally here. Okay. The bulls are looking for something, you know, special. But even the bears think there's a rally coming. I don't know. Maybe we need one more flush. I don't know what would do it. Any ideas? What would take the market? There's a million ideas, a million reasons for the market to go down now, aren't there?
The problem with the markets, with the equity markets, is that people are not panicking yet, or maybe panicking is the wrong word.
They're not getting out.
They're still trying to buy the dip. That's the thing.
I heard that they're still holding. I don't know who I heard interviewed, but they're still long. They really haven't even regurgitated.
Our friend Scott says 75 base point hike. Yeah, that will do it for sure.
Yeah. Okay.
But yeah, I mean, longs are not. They're not capitulating yet. Far from it. The people are still trying to buy the dip. So as long as that happens, we could get a bear market rally. But I'm going to sound like a broken clock again. I think we still should be bearish. All this stuff.
Yeah.
And until something changes, and the thing that's going to change is the Fed at the end. You know, full stop.
Yeah. Well,
sorry to be so boring, but I don't have
okay.
much
trends
else.
Change. You're with the trend, and you know what? I'll make you even feel more confident about your call. Dennis Gartman is bearish.
Oh, that's not good.
Now what do you do?
That's not good.
He's short of. He said the only things to be long are gold.
Oh no!
Oil,
come on.
Gold. He didn't say silver. You know, they will yank each other around. Anyway, you know, I'm only kidding. Look, you know, Dennis.
He's not always wrong. That's what I'm hoping.
Yeah. So, wow, we have like a lot. Someone's gaming.
That was my phone ringing. Sorry.
All right. So, K-Man, I got to bring you in on yen then. So we're threatening the support level right here.
Yeah.
What are you thinking, buddy?
We are. But so far it's holding. So as long as it holds, I wouldn't go. And we were saying this morning as well on the flow show. As long as it holds, it's a gamble to try and go for the break. So as long as it holds, it's still there. If it breaks, I think bad news. PMIs in a bit could take it through. To be honest, it's looking weak. I think a lot of weakness today comes from the sterling yen, which got pretty much hammered. But yeah, as long as it holds, let's hold it. And then if it breaks, we could have a look at probably 125 or so. But yeah, until then, we stopped right above it, like 127.08 last time we did.
Yeah. What is it? Don't they look identical? So this almost looks like the yen chart, the same type of consolidation pattern after a break that we're getting, and that's a 10-year yield. Look at that, and now look at this. Pretty similar, isn't it?
Yeah, absolutely, absolutely. It's following the yields and then a bit of crosses, really. So I'd say I'm cautious. You know, I've bought of it last week. Then before the end of the week, sold them out because we failed above 128 a couple of times, not even going 129. And now I'm just sitting here and waiting. The PMIs today could be interesting. Could cause a break if they fail, like the UK ones. But
if we get a weak one. You know, I have this neckline here on the 10-year, and it hasn't broken down yet. So, but you know, if we take, it looks like 272-ish,
73.5. Yeah, we were talking about that last week.
Yeah, and then you have the 50-day converging with it. So that's going to be it. I think that'll tell the tale of yields for, you know, maybe the next couple months if we take that out.
I'm cautious because when QT will start, it should mechanically add some to the yields picture.
Who's going to be the buyer of what the Fed is selling?
Well,
anyone know?
I'll give him a tenner for it.
Yeah, so Ryan's the only bidder on what the Fed is going to be liquidating, and he's buying it at a 90% discount. So where are the buyers going to come in for our paper with all the, all the paper we've really piled up to the, into space. So you think about it, just think how much even interest rate servicing the debt has increased dramatically with this move in yields. Who's the buyer if the Fed is liquidating?
But
does anyone have a guess?
If you're looking,
that's on top of what they'll let roll off naturally as it expires.
Yeah, but if you look at if you're asking yourself the question, who's going to be the buyers for the paper, that means that yield should go back up.
That what?
Yields go back up.
Yeah. Well, here's TLT, and Greg had the same count. So I don't know if the 10-year is going to do it, but he was calling this like a 4. And I heard, a few other people I felt 4. That means a new high in 20-year paper. I don't know what it's going to mean for the 10. So that means that we're still in that great steepening that Joseph Wang talks about, and a lot of people throughout the financial world are talking about the great steepening. So that'll happen again if we're going to break here for one more flush in the bond market.
I could see it happen once kicks in, and the next, let's say that the next two times 50 at least, and perhaps another ones are sort of in the market. But has the market really already anticipated and traded QT? I'm not 100% sure.
Well, you look, Fed guy, and I was surprised to hear him say it. In fact, I had internet issues that day, and Blake did a great interview with him. But one of his things is that the treasuries are still mispriced. And to me, when I look at a chart, I go, "Wow, they've really gotten cheap." And what he's saying is, man, they're going to get a lot cheaper.
Yeah.
Right.
Yeah. I tend to agree.
I think the only positive thing I could say about equities is, the Russell did not make a new low yet. It didn't with all the other indices. And this is what people are most bearish. So maybe the Russell's trying to say something for a bear market rally. And, I'm with you, Stel. I could see how we could get pulled back to 21 here. I'd be all over it. Maybe the ECB, since we basically Lagarde, gave people a chance to just front run the ECB. That maybe what could happen is they're not as hawkish as she talked. Is that possible?
Everything's possible.
Yeah.
But
so we've almost had a 400 pip move here.
Yep.
I'd love to buy a pullback at 105.
Yeah, I think. Yeah, I think.
Me and everyone, Ryan.
Join the queue. There's a long queue. You're about 200 in line, mate.
I have no patience.
Good morning, guys.
Morning, Blake.
Hey,
there's a senior citizens lane.
Hey, CEO, make us.
I want to be a buyer at 105. Where were you like a week ago?
Oh, I don't know. It was either or until for me until what happened Monday.
Hey,
but, I was long gold, so it was almost the same trade.
That makes sense. Did you guys talk about like who's the ECB member that's all hawkish this morning? Isn't that what'd you guys name him over there when you tweeted about hawkish?
Hawky Holzman.
Yeah, Holzman. That's right. So now I got to ask you guys this question. Do you think that the ECB is going to follow through with a 50 basis point hike?
No.
No
Come on. Really?
No way.
No way.
You mean total or
they're
one
babies,
hit?
Blake?
No, at once.
No.
They have an oil crisis.
That's the thing. People don't think they're going to do it. I think chances are higher than people think that they're going to do it.
There you go. The Stelios the Hawk. Look at that. Stelios the Hawk. I love it.
Stelios used to trade against central banks. At the desk. He knows.
Well, I did trade the pound quite substantially at some point, but yeah.
With a BOE? You ever on the other side of a BOE?
I did derivatives, so not directly. No.
Okay. All right.
I mean, if you want to, if we want to figure out one way the euro sterling gets above 86 pence is get a hawkish ECB and UK PMIs that continue to weaken like this. So I mean, what do you guys make of the UK PMIs today?
Well, that was weakened, and we have to look at the big picture. I love doing that, and we all know the price of materials is rising. Retailers are trying to absorb the costs. We're seeing what's happening with, in the US with Walmart. Now we had, which one was it today? Abercrombie and Fitch. I think they missed badly, and we're waiting for others. I think retailers are going to struggle.
Abercrombie and Fitch hasn't been in style for like 15 years.
I know.
Stelios is still wearing that from back in the 90s.
Retailers are going to have loads of problems, and that's because the consumer does not have money to spend.
They're trying to say they bought the wrong inventory. Okay, that's what they're trying to say.
So PMIs are weakening, and they're going to continue, I think, because when the demand is dropping off like a stone, what's going to happen? It's only natural, and that's why the problem comes now for the Bank of England and for other central banks. They're seeing it already. The Fed's tightened 100 basis points, and we're seeing already an effect coming through. And this effect obviously has a delay from the hikes. So what's going to happen if they hike another 100? I mean, I'm scared to think about that. What happens if they start tightening QT?
Well, and then on top of it, you were just talking about in the chat room, Ryan, about what were you saying about the energy costs there in the UK?
Yeah, the regulator's saying that the energy cap, after going up 50% in April, will go up another 42% in October.
Wow. I mean, that is just that's so. What how's that going to affect the UK economy? I mean, I'm trying to.
It means I'm going to be chopping down trees to put in my heater come the winter.
Yeah, holy cow! So you think this is going to have a huge effect, probably going into the end of 2022? Then
Yeah, it's going to add to the cost of living crisis. But there were signs in the PMI, in fact, that people weren't prepared to pay the prices that firms were charging. So that could be the start of a peak in some of the inflation. Because when people stop paying, that's when you start getting into deflationary territory, and you start seeing inflation plummeting.
That's when companies start going broke as well, right?
Yeah. But we saw this coming last year, stagflation 2022. We were banging on about it, and it's on a tightrope. I'm not going to say it's going to happen, but it's more likely than not.
Right. Yeah, we're definitely headed that way. Okay. Well, I brought up the euro, and I want to talk. Oh, I brought up the euro in a tweet. So, and Joe actually responded to me. Joe's in our chat room. He responded to me. Blake, I don't care about fib levels. I love confluences, and that's a great point. Something that I always look for is finding multiple levels of fibs, right in the same area. So what I was really focused on is the euro dollar at the 618 retracement, but also we hit the 127% extension of the last leg lower, which all comes in around the 107.15 level. Now we're hovering around that right now, but I do think that we'll make it up towards the 108.25 level. Most of everybody here should know if you watch like the week ahead video or you're watching these daily. I'm bullish the euro and I'm long, so I'm sitting in here, but I know we're starting to get into some dicier levels. So I want to ask you guys, with the euro and these positive comments, the euro is sitting up here above 107. Do you guys feel that the euro is going to continue to squeeze higher?
You know my view. I think it will. Obviously, it won't go in a straight line, but I think the squeeze is still on.
You think the squeeze is still on? So you think the euro is going higher from here? What do you think, Ryan?
Yeah, I think it's definitely a dip buy. More than a rally sell at the moment. We've got some big levels. My main level is up at 107.87 to 108. That was the fib, 38.2 fib of one of the moves there. Can't remember which one. I haven't got the chart up.
Right there.
Yeah, probably
right where that trend line starts. Actually, it's right there.
Yeah.
Well, Blake, we did negate that
area, Dixie and then we got the 109.30s, 40s. That all those tops up there that we had a couple of months ago.
Okay. Well, I'll be happy if we make it to that 109 and change. What did you say, Dale?
For a while we were talking about that breakout in the Dixie that ended up being a false breakout yesterday.
Yeah. From the week ahead video, and just this is something that we've talked a lot about here is if you look at this is the 2017 spike high, 2020 post-COVID spike high. Then you go back like 2 weeks ago. So 2 weeks ago, the dollar index, after that breakout, it came back down. We thought it was maybe going to be a false breakout, but we hit that trend line once again. That came in around 102.30.
Yeah.
So now that we're back below that, it is a bearish development in the dollar index. 50 DMA seems pretty logical at this point, but last night we spiked to the 127% extension in the dollar index, and you can see we're just kind of consolidating here below the breakdown point, which is again 102.30. So as long as we stay below that, I think the target should be probably somewhere around here, and you're going to see like the relative strength move just a little bit lower to get towards oversold, before we bounce. And my assumption is going to be we're going to trade down towards 101, somewhere around there.
A lot of people still bullish, probably still lots of longs to be liquidated.
Yeah, I mean, look, everybody was very bullish the dollar going into 2-3 months ago. So yeah, it's very and
crowded.
It is a very crowded trade. I would agree with that wholeheartedly. And then if you look at it from more of a longer term perspective, I'm not necessarily a dollar bear. I'm actually more of a dollar bull, but that near term. We could be doing something like, near term, we could be doing, didn't mean to do that. We could be doing something more like this. So
cup and handle.
Yeah, I think that's kind of realistic. I don't want to get,
too far ahead of it.
Yeah, I don't want to start buying the dollar right now thinking that that's eventually what's going to happen. But I do think that the dollar is going to pull back here. And as you pointed out, really crowded trade. Everybody was bullish the dollar just, 2 weeks ago. And most people that weren't even currency people, right?
Yeah,
so
they were buying UUP. It was one. In fact, the guest I had yesterday showed one of the most popular ETFs was UUP, which is a long dollar ETF.
Right. Well, speaking of longs, let me ask you guys this. So we had Snapchat really just kind of crush the market overnight, and you think about the
wow.
Yeah, well, pre-market we're down, what is that, 20 some odd percent. You think about Snapchat, and I have teenagers, so and it's down 30% roughly pre-market. So Snapchat is pretty widely held institutionally, but I look at Snapchat from a parental point of view, and my kids are on TikTok. They just, my teenager who's in the hip teenager crowd people, he like hangs out with all. They're just on TikTok all day. They use some Snap just to communicate, but I don't know. You can see that the stock looks like it's just gotten demolished back at 2022 levels. So do you guys think this is an insulated event, or is it just like further deterioration of
what do you mean by insulated event, Blake? We have a ton of charts that look exactly like that, and the common denominator is that all these charts belong to companies that are in the so-called growth complex, companies that were selling $10 bills for $9, and of course they had an increasing revenue, because when you do that, you get, when your only target is increasing the base of users, it's easy to achieve. What is not easy to achieve is a company that with some type of profitability later on. So, all this hype around all these type of stocks is now going away when the market realizes that these companies cannot keep on with the business models they had, because the business model was based on, we increase our user base and we hope that the market stays hyped enough to keep giving us money through selling our stock. But what happens when this process reverses? What happens when these companies don't have any more buyers to sell their stocks, to actually pay their employees, etc.? That's what happens. What do you see there?
Yeah. Well, I don't disagree. One of the things that I'm on these platforms, whether you're talking about Facebook or Snapchat or Instagram, I really am very skeptical about the from an advertising point of view. I mean, we as a ForexAnalytix, we've done some advertising, just to get the word out about ForexAnalytix in over the years. And we've had the engagement that you get from these platforms is not so good. It's negligible. And so when you get companies like ours, and I'm just using ours as an example, but you get companies just in general that pay, Snapchat or Facebook or whatever it is to promote your products. And you realize that it's like there's not a lot of return on that investment. That happens, I think, across the board. And I know we're not an isolated company. I've talked to a lot of different, CEOs and whatnot regarding this, and that's pretty. It's pretty common. And it's more about name brand recognition, but at some point, companies go, well, I'm just not seeing the payoff there. So, it's interesting. I think Snapchat has really lost a lot of its luster, but, there are these types of technology companies. There are ones here that I do find that will be of value at some point. And Snapchat might be one of them. It's kind of like Netflix. I'm looking at Netflix as, I'd like to put some away here very soon. And Snapchat would be one of those technology companies that I would do as well. And so I'm going to look at this, and matter of fact, we're going to go to the all-time low to the high, and just realize that the 88% retracement comes in just slightly below around $13. That's kind of one of those last ditch efforts for longs, is going to be around that 88% retracement. So something I think we should be looking at. So anyway, some food for thought. Any guys, any other ideas regarding Snapchat?
I just think it's amazing that an app that has people falling off skateboards is a bellwether for the general economy at large. Crazy days we live in.
It's crazy, isn't it? It is. All right. Well, we were talking a little bit about the euro, talking a little bit about the Snapchat. What do you guys make of? And I heard you guys talk a little bit about the bond market and yields. I didn't catch the whole conversation, but I want to say that this 10-year. This is kind of a setup I've been looking at for like the last, couple of days. We've got this inverted, well, actually since last week, because as a setup I used for the trade-off with Pepperstone over at with Chris Weston, excuse me. And we have this inverted head and shoulder pattern developing, and we've really knocked our head up over the last couple of days, just up against that neckline multiple times. Do you think yields are going to go lower from here? I heard a brief conversation that you were having, Dale and Ryan and maybe K-Man, a little bit earlier, but I was stepping away to go grab some coffee. What do you guys think about yields here?
Yeah, I was saying that still want to see what happens to yields when QT kicks in. Most of the Fed actual hiking in the next 2 times 50 BPs or even 3 times whatever, they're mostly priced in the short-term market, but QT should mechanically add a bit to the yield. So I'm wondering if we are going to have that last perhaps yield spike coming in. And Dale was rightly pointing at in the 10s at the 273, 275 zone. If that holds, I think we are still in a pattern or situation where yields could actually go back up a little bit, just mechanically due to QT kicking in.
QT. No one wants to hear any more about QT, I don't think. No more quite quantitative tightening. How can we get some loosening again? That's when the party is fun. The party is fun when we get in some QE, not QT.
Yeah, you know what the problem is, that the party ended up bringing along, the music and all the hype. It ended up bringing 10% inflation as well, because at some point, when they got overconfident that all this liquidity will stay in the top and just keep creating asset bubbles, they got too confident, they locked people in, and when supply was diminishing, instead of making sure that they're going to reduce demand to go along, they did the exact opposite. They increased demand while supply was going down, and now we're stuck with inflation, reported inflation close to 10%, and who knows what the real inflation is.
Well, that's right. Well, it looks like we're fixing to find out, right? Here in the months ahead. So I want to one last thing. We have the dollar Mexican peso. You can see it's just been super heavy. And K-Man, I want to ask your question about this. I know you and I focus a lot on the Mexican peso. I'm actually long pesos, meaning I'm short dollar Mex. I'm getting a little nervous as we're heading into this major support here. What would drive emerging market currencies higher at this point? What are your thoughts? Like I said, I know you and I focus a lot on the EM space. So what do you think?
I think for one, I updated the chat probably minutes before you're right. This dollar Mex is extremely heavy, because even in the risk off, when we saw 20% move lower in the S&P, usually EM is suffering a little bit, but then look at the Mex, look at the ZAR, the rand. It's amazing.
This should be right here. Based on what we saw here, right?
And I think partially it's a fact of the central banks having hiked faster even than, because they started earlier, faster even than the Fed. And if you look at then stuff like Euro, Euromax, Euro Rand, it hardly gets off the bottom where we traded. So I think it's the, if this, I was saying earlier, if this dollar max breaks 1970, I think we could be in for another leg lower. Of course, 19.5. A lot of people are watching at it, but we could be.
And you know, people need to, they shouldn't forget where the dollar max has come from. I mean, that's the thing is, when Jim Cramer from CNBC, he actually said that the dollar max right here was going to go to 5, and that was the bottom, and we actually went the other direction in multiples. But that was only about 12 years ago. And I remember watching him that morning saying that dude is smoking crack, and Jim Cramer is still smoking crack, I think. On a day,
I think he's the best contrarian indicator out there, Blake.
Honestly. Yeah, he's up there with Dennis Gartman. I sure miss that guy. So anyway, we've got you can see this really big level of support just kind of grinding higher. We start cracking the 1950, 19 level, and things are going to get a little squirrely for these pairs. And I believe you want to be a buyer of Mexican pesos. I do. I mean, a longer term buyer of Mexican pesos. You get paid to do so too. So it's something that I'm monitoring very closely. Dale, I know you got an interview coming up. I want to mention, just to everybody, if you guys have not checked out the new, first of all, here it is. This is our F.A.C.E experience. You guys are listening to it right now. This is our new website, so check it out. So when you see us tweet about this, make sure you retweet it and promote it, please. That would be great. This is obviously a free show, so hope you guys and gals are really enjoying it and enjoying Dale. Yeah, it's Tradertainment, baby.
Oh, I like it.
Yeah, and Dale's got an interview going up. I don't want to take away from that, but I also want to mention the webinar sponsor. That's us, and also the Trader Funding Program. So make sure you check out the Trader Funding Program, the TFP, better known as. And if you want to try to qualify for a larger trading account, you don't have access to these larger amounts, or you want to trade our money and not your own money. Well, you keep 75% of the profits. You have to just go through an assessment, and there's a little 2-minute video right at the very bottom. It's not easy,
but people are doing it.
Oh yeah, we actually had somebody qualify live for a $250,000 account, I believe, on Monday night. Was that last night or Sunday night? One of the last 2 nights. So yeah, I mean, it's a nice option for people to have, especially if they don't, like, if you got money that you're like, well, I don't want to invest my own money, but taking 75% and having no risk, when I say no risk, you're not responsible for the losses, but you keep 75% of the profits. That's pretty cool. Just, you have to pass the assessment. So give it a whirl. All right, Dale, I'm going to pass it on to you. Thanks everybody for attending, and have a great interview.
Thank you very much.
Thank you,
team.
Thanks, team.
Guys. Good luck today. Harold, Hal, my buddy. Great to have you back. So much to talk about. How are you? How you doing, Hal? Still waiting for you to unmute. I'm asking you to. Go to the microphone and unmute. It's on the bottom. Because we have stuff to cover.
He's still self-muted.
Yeah.
Dale.
Yeah. So if you're hearing us, scroll at the bottom with your cursor, and you'll see the mic all the way to your left.
Yeah.
There he is.
Got you.
Yeah. I don't know what happened, but anyway, great to talk to you, Dale.
You too, Hal.
It's a time of turmoil, and I was trying to think in just a few minutes what really we have to pay attention to. Number one, we have now in play a slowdown in global industrial production and trade. And we're going to see trade growth near zero. And I think that it's a result of China at the lead.
Lockdowns.
It's not just the lockdowns. The domestic consumption is collapsing, not just because of lockdowns.
That's the excuse.
And then the exports, the only way you can keep that economy going is industrial exports, particularly industrial machinery, selling railroads, earth-moving equipment, and so forth. But
like
the demand for that is now near zero. I mean, there's no new orders developing for China. So their export potential is going to be really grim. Same, by the way, will apply for Japan and South Korea, that are both big exporters of similar products. They're facing the same thing, no new orders. So you get a globally.
Where would most of the new orders go to? China is what you're saying, right?
Well, it goes to China, but also to emerging markets.
Emerging markets, okay.
Yeah. So, point one, just like the second half of 2019, global industrial slowdown synchronized. Now, at the same time, we've got slowdown in European growth, because they will also be suffering a weakness on the export side, plus a lot of the internal problems.
Hal, can I make a comment? We've recently had a little bounce in the euro, and the dollar's been on a tear. So, if Europe can't export with a 103.5 euro, it's going to be difficult if the euro starts trading 110, 115, 120. That's going to be another headwind for them, isn't it?
Yeah, I don't think it can happen. I don't think the euro strengthens. Now,
okay.
Let me jump to something not well understood. About 3 weeks ago, the Treasury, Mrs. Yellen, began calling around to really big equity buyers. And, you start with who's the biggest. Maybe you'd pick Norge, the Norwegian Sovereign Wealth Fund. She called directly, not in the news. I'm telling you what's been going on that I get from my own network. Right. The CEO of Norge, she talked directly, not about Fed issues, but about markets, with the head of the Swiss National Bank. She called around other sovereign wealth funds.
They looking for a bond buyer on the QT, on the balance
what
runoff?
They're looking for, what she's said that she's looking for, is a much stronger dollar. And that even higher than 103, 104, 105, much stronger. It's a policy. Now, you can argue about that all day as to what the purpose of it is, but I'm sure part of it is punishment of China and others. But underlying was also the argument that the stock markets will go down over the year, and we need to have a floor. So we're going to rely on you big guys to provide the floor. Now, if you think about it, the Fed is increasingly relying heavily on big outfits like BlackRock. And now we're getting the Treasury on its side, trying to get in play the really big players and putting in position a bottom when the market goes down. 10 or 20 years ago,
I thought they had a plunge protection team, Harold.
That's right. But on a global scale, with global players, this is something new. It's highly concentrated, really big in terms of the impact. And that's in the background. So whatever everybody's thinking about currencies, you got to think in the background, there's a big game being played. And I'm sure it's tangled up with the U.S. political timetable also. Now,
they don't want they want a market rally into the fall, don't they?
Yeah, of course. Yeah, of course. Yeah. But the circumstances.
Could they get crude under 100? That would do it. Could they? They have any tools left?
I think the Biden administration ability to do anything about energy is so confused.
Yeah,
they're simply unable to come up with a plan because of internal conflicts between tree huggers and people concerned about the economy. So it's kind of a vacuum on that side.
It's a vacuum in almost all policy areas.
Yes,
Harold. Doesn't it feel that way to you?
Yes, totally.
So what a unfortunate time to have a vacuum at the top of our country with everything that's going on. And, I do want to bring you back to before the war, you did say that there would be an invasion. There are some people thinking there wasn't going to be one. So you called that. And then you also talked about that, Putin might retaliate. There were a couple of underwater cables that may have been cut by his subs. And I'm kind of surprised, and I think most people are, is that we haven't felt, besides shortages of everything, which is going to impact everything. He hasn't retaliated in any way, cyber, or maybe we've just been successful in blocking attacks. Do you still expect something from Putin? And do you think that he's going to lose this war?
I'm following that war really closely. I talked to a lot of people, including, I do have a network into Russia. So what I feel is that, number one, Putin's totally surprised about the failure of his military, because he really did expect all of this to be over in a number of days.
So did our U.S. intelligence. Where was the failure? Biden was saying 3 days Kiev would fall. Right?
Yeah, but we estimated the Russian military to be as strong as Putin believed it to be, and it turned out we were both wrong.
Yes.
Because it's a special military exercise, as Putin calls it, under Russian law, the conscripts, if they walk away, there's no real penalty. And if they declared war, then somebody who wouldn't shoot could be shot. But what's happening is a lot of the younger conscripts are simply walking away. They're deserting, and there's no penalty. So that hasn't been much noted in the press. But when you leave the machines lined up on rail tracks and just walk away, it makes it easier and easier for the Ukrainians to blow up the hardware.
Is he going to get desperate enough, since he hasn't been able to be successful conventionally on the battlefield that he's going to escalate with
It
chemical
depends
or tactical nukes?
Depends on how far the Biden people and some of the other Europeans go to try to humiliate him.
Well, how about Finland and Sweden joining, wanting to join the NATO?
Well, all of that is strengthening.
Right.
But it's not NATO, by the way. It's Northern Europe unifying. If you ask people in Portugal, they have no idea, no interest in this. But if Putin comes to the point where he's being humiliated, he will pull out tactical nuclear weapons. And where he'll put them is on those supplies coming into the Ukraine, and in the process may hit some Americans and some Brits. So it could escalate quickly. As it's going now, he's running out of the ability to keep going, but he's prepared to keep going for months because he has a different target. Everybody's thinking about Eastern Ukraine, but he really, really wants to seal off the Black Sea and make a corridor west to the area around this Transnistria location just below Romania. It's been in his mind all along that he wants to build out Russian territory. So it's not only about Ukraine. Right now, he can't do much more.
Is that Moldavia too, where he's been?
Moldavia. Yeah, Moldavia is a target. This is not over. The question is, can this stabilize without him being humiliated? The way that the Biden people are talking, it sounds like they want to push him to that point. And there's where I agree with Henry Kissinger just the other day, saying there comes a point at which you want to stabilize the situation without humiliating the leader. So this is not over.
Okay,
now,
that's not over. Let's talk about something that was kind of shocking to the Biden administration, not to Joe, that we would respond, the U.S. would respond militarily on any invasion of Taiwan by China.
Well, I think that's the consensus in the administration. It's just the consensus was also don't say it out loud.
Right.
So
that's what I mean. Yeah.
So Biden spoke it, but I don't think it changes anything. China is not in a position right now to go to war with Taiwan. China's economy is really in dire straits, and a lot of unrest is developing internally. It's just before the October plenary session of the party. It would be bad for Xi Jinping. I mean, his hopes to be permanent leader, emperor forever, would be ruined if he got in the middle of a battle at sea. So I think the misspoken words of Biden won't matter. In a few days, everybody will have forgotten about it.
Okay. So I know I took you off. You were really on a financial track when I just brought you back to the war, because I was, since they invaded, I was interested in, what you thought the end game might be. And it doesn't sound like
there is no end game right now. And
Yeah.
nobody's talking to anybody. There is no dialogue. The one person to watch, actually, the only trusted go-between is the Prime Minister of Israel. He's the one that Putin and Zelensky talk to all the time, several times a week. Somehow in the background, if there's going to be movement, watch him.
Okay. So, we have this food shortage situation, which was already going on before, Ukrainian wheat. The only one getting it are Russians, taking it by truck back to Russia. And then India, most countries banning exports of things that are in short supply. Many uprisings, like, the Arab Spring was over food prices, and you're talking about China. They're prepared. I mean, they're a big stockpiler of wheat. I don't know how you could be prepared for a global famine in such a large country. But do you see this food security issue? Which regions of the country, besides us Americans, will complain about the higher prices, but at this point we could still get stuff, just pay through the nose to get it. What about there just not being enough in other countries? Could this be what destabilized China and finally, things get away?
It's going to be a severe problem in China, but it's going to be a severe problem across the Mediterranean, all of the Mediterranean, Northern Africa, places like Egypt. The problem is actually global, because when you get to the main cereals, it's like soybeans, grain,
wheat and corn,
you got, the big players are not just U.S. and Europe, but Brazil. But the slack in the system is not great this year, and if we look out ahead, this problem can last 2 or 3 years at least. So it's going to cause upheaval in many of the smaller countries. For the American consumer, if food is more expensive elsewhere, a lot of it's going to get exported. So our prices will go up, even though we have supplies.
Yeah, that's what's happening with natural gas, because we're exporting now.
Same.
Yeah.
So,
is there anything to be happy about? Took you too long, Dale.
Yeah. If we look ahead, let's get past right now all this turmoil plus entangled supply chains, slowly becoming unentangled, kind of split between China-related supply chains and the rest of the world. All of this will take 2 or 3 years to sort out. But then what I see coming is a much lower level of long-range transportation and a big shift towards shorter supply chains, more local production, especially in manufacturing. A lot of new technology surging forward. We're going to come to what I call industry 4.0. It's coming quietly but very fast now. And a lot
also, Harold, I believe you said in one of our interviews, people are worried about the scarcity of rare minerals and, semiconductors and things that, are geographically exclusive to certain areas, like Russia, palladium and so forth, that you talked about synthetics being made to serve the same purpose. That would sure change things about people fighting over natural resources, wouldn't it?
Yeah, I think we're going to see a revolution here, because new materials every day, major advances being made, and then also where we make things. 6 months ago, we were talking about semiconductor shortage in the U.S. Then we had the announcement of the Taiwan you know, manufacture, and Samsung said, well, we'll build them in the U.S. And now we've got other plants, Intel. And by the way, where these plants are going are not where you would think. They're going in Arizona and Texas.
Yeah.
And everybody said, oh, that's impossible. Those plants need a lot of water. But what the company is doing is they're piping the water from hundreds of miles away. They've already built in the idea, we don't need the water, we'll go get the water, bring it. We're going to have a revolution there. And the materials for making the semiconductors, new ideas are coming out of MIT really fast now. I'm not worried about that. What I'm saying is the supply chains for a lot of things are going to be shorter. We're not going to have to dig up earth the other side of the world and ship it all the way to the U.S.
Yeah.
And there'll be a lot less shipping of high value products like automobiles. The Germans will do less autos in Europe for sure, but they'll do more autos in Alabama to the extent that they need. So we're going to see reconfiguration of where things are being made. I'm very bullish about southern U.S., very pessimistic about northern U.S. because just everybody's going away from high taxes and policies that are...
People are moving to states that line up with their political views now.
No doubt.
So are you pessimistic about California?
Very.
Very?
Very.
Okay. All right. Me too. Anyway, Harold, you know, that's interesting to, you know, so we have to get through a couple of years of rough seas and developing these new supply chains, and instead of just in time inventory where we went out of time. Yeah,
now it's just in case.
Okay. And Geo, you think this thing is, you know, is this? I know that Pippa thinks this is. We're in World War III. I mean, just because we say we're not at war with Russia, Russia does believe they're at war with us, right?
Yes, no question. But the way, the form that warfare takes may be different than anything we've seen before. Lots of small wars in faraway places. That will multiply. The Russians themselves are all over Africa militarily. But we're going to see more troubles coming out of space. There are lots of new technologies being developed, especially by the Russians and the Chinese and us, to harness energy from the sun, not near Earth, but out there, and then somehow channel that energy to Earth. And that's moving right along, hardly even thinking about it. But that has two outcomes. One is, great, we get some more energy on Earth from a logical source, but didn't know how to do it before. But the second is you can make weapons out of what's called directed energy. So that's
start taking out satellites and so forth too.
Yeah, and even directed energy to locations on Earth and taking out locations.
Okay, all right.
That's coming. Within 10 years, that's going to be very real.
Okay, and so I know you're not a financial advisor, but for yourself, you think this is a good time just to, you know, play it safe and not be aggressive and preserve capital?
Let me boil down my view. Everybody keeps asking what is the dollar? What's the dollar future? And I keep saying that dollar used to be a gold-based currency. I was there when we dropped the gold. What is the dollar now? It is a collateral-based currency. Everything is based off borrowing against high quality dollar denominated collateral. That makes the treasuries, the amount of treasuries in existence, the key to the dollar. But one difference between borrowing against dollar-based assets in the US and then the euro-dollar market is that the leverage in the euro-dollar market is unregulated and much higher. So if the Fed actually succeeds in reducing the total flow, the balance sheet, what we're going to see is what I call the collateral multiplier at work, shrinking credit worldwide much faster than we would have thought, because for every 100 billion reduction in the available collateral, we're going to see several 100 billion shrinkage in credit around the world.
Okay.
Very few people are thinking about that. So,
yeah.
But that also means to me the Fed will have to stop hiking, and will have to slow its ambition to shrink the balance sheet, because it will begin to show, we'll begin to see solvency problems appearing.
I was just going to say that. A lot of people talking about that for the fourth quarter of this year, solvency issues. Yeah.
Final point, U.S. economic growth is going to be near zero this year. I don't know why anybody thinks there's a recovery underway. The employment data are so misleading because the participation rate has been falling. The only thing that I know is that the majority of new jobs created in the U.S. are by small business. So if we look at the household survey, which tells you about small business, each month we're getting a shrinkage of jobs at around 300,000 a month. So it looks like we're building jobs, but that's all statistical mumbo jumbo. Employment, the number the non-farm payroll that we look to is misleading. You need to look at the household survey, and it tells us jobs are shrinking.
Okay.
And
that's
I think
a great point.
We are slowing down, and everybody's forgetting what that means.
It means we're already in a recession.
We are in a recession. It began last quarter of last year. It will get deeper slowly. It will be painful, especially because although there have been wage increases, the inflation rate is faster than the wage increases. So households, gasoline, heat, electricity, just money to spend on odds and ends. So demand for consumer durables is going to dive. Automobiles have been inflated for so long, it's going to die. We're already seeing used cars, the price starting to fall. It's going to fall a long way. This is going to be a very unpleasant year. Bad for Biden, of course, because not going to get recovery before the election. Anyway, that's my thought.
I tell you what, I appreciate it. We should be paying attention to the household survey. Maybe if the Fed does want to take their foot off the brake, they could point towards that and say that employment is starting to, they're calling it red hot. Maybe it'll be.
But at some point they'll have to recognize it's not red hot.
Yeah. So great talking to you again, Hale. I recommend that people go to your website and check it out at malgrim-si.org or follow you on Twitter.
Yeah, Malgrim Strategic Institute. Yeah. Well, I'm on Twitter. I'm on Twitter fairly often.
And that's at Hale's Rethink. That's your Twitter. Right. That's your Twitter handle.
And you know, I'm not taking sides. I'm not taking sides politically. I've worked with both parties. I don't have a personal agenda in politics. But I try to point out is things that we're not thinking about that are happening and before they blow up. So I don't try to stock pick. I try to look at fundamentals at work that are being overlooked. So that's just the way I go at this.
You know what? Here's a word for you. You're a watchman. You're in the tower, right? You're a watchman, and you're hooked up with people of influence, and you know, you're giving them the skinny, Hal. And
that's where I am. That's where I've been for quite a few years now.
Yeah, and we all need watchmen to be in front of the gates and let us know what's going on, because we're all caught up in our lives in the city. So you are the official watchman of F.A.C.E, Hal. And I appreciate your time every appearance and every interview.
Well, great to talk to you. Doing a great job with this system you built with really good people. And I look forward to hearing from Tracy tomorrow, because she's really, in my view, the most outstanding commodities guru in the world.
What a great endorsement for Shy Girl. So thank you so much, Harold, and be well. And I look forward to our next conversation in a few months.
Good.
All right, everyone, that's Hal, and follow him at Hal's Rethink on Twitter. He's active on Twitter. I see it a lot, and it's edifying. So that's good luck the rest of the turnaround Tuesday, everyone. And you could join the team in 9 minutes for the morning edge. Don't forget, don't just count your problems, count your blessings. And if you find something to be grateful for, you won't be depressed. You can't do them simultaneously. And I'll talk to you, everyone, tomorrow. Adios.
Adios.
Adios, Hal.